As the U.S. markets are closed for the day, SoundHound AI Inc., trading under the ticker symbol SOH, finished the session on Wednesday, October 1st, 2025, at a closing price of $16.11. This represents a modest gain of 0.22% for the day. While this single-day movement might appear uneventful, it masks a much more compelling and volatile reality that has defined this stock's performance. The expectation for many watching SoundHound has been a straightforward, hype-driven ascent, powered by the immense narrative surrounding artificial intelligence. The reality, however, is a far more complex picture, one filled with explosive growth, significant acquisitions, underlying profitability concerns, and intense competition, creating a battlefield for investor sentiment that is anything but simple. This isn't just another tech stock riding a wave. It's a company at the epicenter of the voice AI revolution, and the market is still fiercely debating its true valuation and long-term viability. The prevailing belief among many retail and momentum investors is that SoundHound AI is a golden ticket in the rapidly expanding conversational AI market, a perception heavily fueled by its association with NVIDIA and a staggering year-over-year revenue surge. It's easy to get caught up in the excitement when you see a company report a 217% increase in quarterly revenue and boast a potential revenue backlog in the billions. This has led many to view the stock through a lens of unbridled optimism, anticipating a smooth trajectory upward as AI integration becomes ubiquitous. However, a deeper look reveals a more nuanced reality. While the top-line growth is undeniably impressive, the company is still operating at a significant net loss. This cash burn, coupled with insider selling at a sky-high price-to-sales ratio, presents a contrarian view that challenges the simple growth narrative. The tension between its spectacular revenue growth and its lack of profitability is the central conflict that defines the investment thesis for SoundHound AI. This is where platforms like Fidelity and Interactive Brokers become crucial, offering the in-depth analytical tools necessary to dissect these conflicting data points, moving beyond the surface-level hype to make an informed decision. For those managing their own portfolios, perhaps through a self-investing account or even a more guided solution like Schwab Intelligent Portfolios, understanding this duality is paramount. Examining the recent stock movement, the intraday trading for SOUN saw a high of $16.49 and a low of $15.70, with a trading volume of over 23 million shares. While below its average volume, this still indicates significant investor interest and activity. The stock has been on a wild ride over the past year, surging from low single digits to a 52-week high of nearly $25. This meteoric rise has been punctuated by sharp pullbacks, creating a highly volatile trading environment. Recent weeks have seen some of this volatility manifest as a slight dip, which some analysts attribute to broader tech market fluctuations and perhaps some profit-taking after such a strong run. Institutional activity is a critical factor to watch here. Data shows that major players like Vanguard and BlackRock hold substantial positions, lending a degree of credibility and stability. The confidence of these large asset managers, who conduct immense due diligence, suggests they see a long-term strategic value in SoundHound's technology and market position. However, it's also worth noting reports of insider sales, including by the co-founder, which can sometimes be a red flag for the market, raising questions about executive confidence in the near-term stock performance. This is precisely the kind of detailed information that users of sophisticated trading platforms, whether it's the Fidelity mobile app or the advanced tools on Interactive Brokers, need to be monitoring. So, what exactly does SoundHound AI do? At its core, the company is a pioneer in voice AI and conversational intelligence technologies. Its platform allows humans to interact with products and services through natural speech. You've likely encountered their technology without even realizing it. They are a major player in the automotive industry, with their voice assistants integrated into vehicles from major brands like Hyundai, Mercedes, and Stellantis. The business model is primarily centered on licensing its Houndify platform to enterprises. This B2B approach provides a recurring revenue stream as companies pay to integrate SoundHound's advanced voice AI into their own products. Think of it as the engine that powers the conversational abilities of everything from your car's navigation system to the drive-through kiosk at a fast food restaurant. The company has also made significant strategic acquisitions, such as Sync 3 for the restaurant industry and Amelia for enterprise customer service, which have dramatically expanded its market reach and technological capabilities. These acquisitions are not just about buying revenue, they're about integrating specialized AI models that enhance their core offerings, like the Polaris Foundation model, which reportedly offers higher accuracy and lower latency than many competitors. This strategic expansion is a key part of their plan to capture a larger share of a conversational AI market projected to be worth tens of billions of dollars. Comment below and let me know if you believe these strategic acquisitions will be the key to SoundHound's long-term dominance in the voice AI space. Looking at the financials more closely, the second quarter of 2025 was a landmark for the company, with revenue hitting $43 million, a massive 217% year-over-year. This has led management to raise their full-year revenue guidance to the range of $160 to $178 million. This is the kind of explosive growth that gets investors excited and justifies in the minds of many a premium valuation. However, the other side of the coin is the bottom line. The company is not yet profitable, and its earnings per share remains negative. The high valuation, with a price-to-sales ratio that has been as high as 47, is a significant point of contention. Bulls will argue that for a high-growth AI company at this stage, revenue growth and market capture are far more important than near-term profitability. They'll point to the massive total addressable market and the company's growing backlog as indicators of future earnings potential. Bears, on the other hand, will highlight the risks associated with a high cash burn rate and the intense competition from tech giants like Google, Amazon, and Apple, who all have their own deeply entrenched voice AI technologies. This makes a deep dive into the company's balance sheet and cash flow statements essential for any serious investor, something that platforms like SoFi Invest and Robinhood are making more accessible to a broader range of individuals interested in self-investing. The future outlook for SoundHound AI is a classic case of high risk versus high reward. The potential catalysts are significant. Continued expansion in the automotive and restaurant sectors, successful integration of its recent acquisitions, and the launch of new platforms like Amelia 7, an agentic AI platform, could all drive substantial revenue growth. If the company can continue to convert its massive backlog into recognized revenue and demonstrate a clear path to profitability, the stock could see significant upside. The expectation is that as AI becomes more integrated into daily life, SoundHound's best-in-class technology will command a premium. However, the risks are equally pronounced. The competitive landscape is fierce, and a misstep could be costly. Any slowdown in revenue growth could cause the stock's high valuation to contract sharply. Furthermore, the broader macroeconomic environment, including interest rates and investor appetite for growth stocks, will play a significant role. For those considering an investment, it's not a simple buy or sell. It requires a careful consideration of one's own risk tolerance and investment horizon. Whether you're using an individual brokerage account at Fidelity or a more streamlined app like Robinhood, the core task remains the same: weighing the tremendous growth potential against the very real risks of a company that is still in its early stages of proving its long-term financial model. In summary, the story of SoundHound AI is a perfect illustration of the tension between market expectation and underlying reality. The expectation, fueled by the AI frenzy, is of a company on an unstoppable upward march. The reality is a business with phenomenal technological capabilities and explosive revenue growth, but one that also faces substantial profitability hurdles and operates in the shadow of some of the largest corporations in the world. The recent, relatively quiet trading session belies the fierce debate happening among investors. The company's strategic partnerships and acquisitions have positioned it as a leader in key verticals, but its financial performance is still that of a growth-stage company, prioritizing expansion over immediate profit. The path forward will likely remain volatile. Success will depend on its ability to continue innovating, successfully integrating its new assets, and ultimately translating its impressive top-line growth into sustainable profits. For investors, the challenge is to look past the noise, analyze the conflicting signals, and decide whether the potential reward of backing a leader in the voice AI space justifies the inherent risks of its current financial position.